Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today we are recording episode, 230 maybe. And today I have with me Char Hu. I practiced that. CEO
You did well.
at the Thank you. CEO at the Helper Bees, a data-driven home care company. And by the way, if you are listening to this on your podcast and not on YouTube, highly recommend. I'll include the link to the YouTube version. Highly recommend if you're home, just watch it on YouTube because it's much more fun, and we would appreciate your subscription on YouTube. So, Char, thank you for joining today.
Yeah, I'm happy to be here. Doing great.
Awesome. So as I was telling you before we started recording, I'm a PNC guy. I know very little about the healthcare side and nothing about the long-term care side. So as we always do with the guests, we'll give you the chance to kind of give the elevator pitch for what is the Helper Bees.
Yeah, sure. So happy to educate you as long as you want on long-term care. We were talking before the show, health insurance has significant problems. Wait till we start talking about long-term care and your brain will it'll explode with the nightmare that sort of we're faced with right now. That's not why we started the company, but we'll get into sort of the origin story later. But real quick about us, you already mentioned data-driven home care. What we do is help some of the world's largest insurance carriers use data, use tech-enabled services to substantially reduce their claims costs associated with delivering services into the home. So where we choose to live, where all 90% of adults want to live is at home, and so we enable that to occur on the payer side. So we deploy great services, tech, to reveal insight and new services to make that happen.
Okay. So let me kind of dig into it a little bit. So my mother-in-law, right? So my mother-in-law is in her 60s. She's retired. She's in really good shape. In fact, she so much so that she does like marathon length walks or hikes. She's in really good shape, right? But yeah. At some point, we know that she'll start declining, right? But
Right.
Basically what I'm saying is we're expecting her to live into her 90s, right?
That's right.
And at some point, right. At some point, she'll need some help, probably.
Yeah.
So I have no idea how it works right now, but here in about 3 years, she'll be on Medicare. So will Medicare cover any long-term care when she gets to that point?
That is the most common question we field at both the Helper Bees and I also help found dementia facilities. So Medicare does not cover long-term care. It will cover a very short amount of stay in what we'll call a short-term skilled nursing facility. So that would be like a nursing home that you might think about. That's after you go to the hospital. Let's say you happen to have a fall or a hip replacement. Medicare will cover, let's call it 90 days that you would go to a rehab facility. And they might cover about 90 days of home health. This is where a nurse or a physical therapist comes out 2 to 3 times a week to help you out. But when we actually think about long-term care, meaning years and years of your life, helping you to remain at home, Medicare doesn't cover it. And frankly, when we get called by older adults who need services either in our facility or on the home care side of things, people are angry. They said, I thought Medicare covers this, and it really doesn't. And I think a lot of folks are unfortunately, in for a rude awakening, which is why we're out there, sharing the word about, we got to get prepped. Either a new insurance product is going to be created or we'll be responsible for it on our own.
Okay. So in her case, she's got significant assets. Now, not wealthy by any means, but a paid off home and good 401k savings from her working career,
Sure.
which was successful. So she's in a good place. So when she gets to that point, right, we can start liquidating assets to cover her expenses. Now,
Yeah.
they're right. It's not gonna like if I'm understanding correctly, like a nursing home or even home help.
Yep.
It runs.
So I'll give you
50,
some numbers
70,000
to help
a year,
you.
right?
Yeah, that's right. So a run-of-the-mill assisted living facility, that's where a 24/7 residential facility, out of pocket, you're talking anywhere between $60,000 and $75,000 per year. That's not your healthcare expenses. That's just sort of the care and room and board. If you got 24/7 home care and you got a good deal at 24/7, meaning you got a team coming in providing care, you're talking about $12,000 a month. of service to remain at home. And so there's a lot of conversations out there that people are doing the math, and what people are realizing is, perhaps not necessarily your mother-in-law, but Americans who own their own home would be in the middle class actually cannot afford long-term care because let's say you liquidate assets. Let's say your home is $300,000. You're talking about maybe 5 years to be able to live off of that, again, of just your assisted living coverage. It doesn't even include all of your sort of potential medical expenses. And given that we're living longer, these chronic conditions like aging will become a bigger issue, which is why, we work with large long-term care insurance companies and very recent Medicare Advantage plans to sort of target this because you and I have a massive problem, which means, as you know, sort of for insurance, that means insurance has a really big problem now. The payers do.
Okay, so how does the data-driven piece come in? How do you guys help the health insurance carriers through this?
Yes. So think about sort of the access to information and data. So you sort of know about the healthcare and the difficulty of even yours or or if we go to a new physician, being able to transfer records over, that sort of thing. And so a lot of AI-driven companies, a lot of data science companies are trying to target and stratify risk and pull really useful information out of medical information. So let's sort of look at that under the home care lens. Aging isn't really a medical issue. It's slightly of a controversial statement, but as we grow older, physicians not going to be able to prescribe a pill for me to really, by and large, get in and out of my bathtub easier, for me to get my groceries, for me to cook. These issues that we're dealing with are more like social issues, very similar to what in the medical world we have social determinants of health. It's very similar to that. And so extracting data, though, from the home at scale is really challenging. And what I mean by data, it's how is that individual doing? Are they depressed? Can they open their pill bottle? How many hours of care are they starting to increase? Can they bathe? This sort of information gives you quite a bit of insight into, like, if we plot your entire claims block on a plot, like, I want to know outliers, right? Like, I want to be able to, insurance likes those. Like, I want to understand these individuals and deliver targeted interventions at that point. This is really good in theory, and a lot of other insurance lines have started to do very sophisticated data models. But if the structured data isn't there because it's on paper, which is one of the issues that we help solve, or nobody has structured it, meaning nobody has brought all of these different data sources together on one platform so they talk back and forth to even create that sophisticated outlier model. And so we're doing all three of those. So we digitize that information, we extract information. So let's say 12 data points from the home. Every single visit, we're able to pull some information out with the whole purpose of being able to identify and target individuals who might need more care, better care, different sort of care than they're receiving.
Awesome. And how did it come to be? So I'd love to hear the origin story.
Yeah. So I was a former research scientist. I was not very good at it. So my doctorate is in biophysics. I used computer simulations. My team most of our team is developers, and I program in a language called Fortran. So if you have any nerds, I know it's insurance nerds, if you have any tech nerds on there, they will absolutely be dying laughing because our CTO and chief product officer laugh at me. So I transitioned out of that world to help found dementia communities because my grandmother was diagnosed with Alzheimer's disease. I'm actually talking to you out of one of them. We own two communities. We have like sheep, goats, and donkeys just right over there. It's a really cool community that I started in my late 20s. So I've been doing it for 11 or so years.
Austin,
I found
Texas?
in Austin, just north of Austin. Mm-hmm. So depending on when this podcast is launched, last week was that snow ice apocalypse that hit us, and we were uniquely dealing with it here in the long-term care facility. So my late 20s were spent here, mopping a lot of floors, hiring a lot of caregivers, then started to help found a Medicare home health agency and recently a Medicare hospice. So spent a lot of my time interacting with payer sources, so different insurance, so Medicare, private pay, VA, veterans benefits, and long-term care insurance. But sort of reading the tea leaves of what I would hear from families are like, love your service, love all the animals, beautiful evidence-based design facility, but I wish I never met you. is something that I heard quite a bit. But I understand it's because they didn't have a great, I mean, it hurts your heart a little bit, but they didn't have a great model to deliver services at home, right? Like they had to come to our facility. And so what we looked at as founding team is like, how do we marry data collection, which is kind of a weird thing, but and transform services at home, because the models that were out there aren't going to scale to meet the demand that we're going to have in just the next few decades, frankly. And we felt like using sort of more sophisticated data models, but like behind the scenes, like all that nerdy, wonky data model stuff, like it shouldn't be exposed to the outside world. It should be like you get to see the cool things like transformative care, and the nerds behind the scene are the ones doing all that work.
That is really awesome, and I don't know if you guys think of yourselves as an Insurtech, and part of it is because I'm the PNC side. I don't know how much
Yeah.
in the health side you guys talk about Insurtech, but it looks like you've been doing this since 2015. So yeah, it's that would make you an older Insurtech
Yeah.
from our perspective, and I have this theory that I call the Abel Travis rule. Abel Travis ran a podcast called The Insurance Innovators Uncensored, something on the lines. And he is the head of innovation, well, now the head of underwriting at AF Group in Michigan, Accident Fund of Michigan. So anyway, Abel, as far as I've heard, and I've heard this kind of like third party, but he's always said that the word Insurtech has two halves. There's insure and there's tech. And in order to be successful, you need both sides, right? So what I really like is that you kind of you yourself have both sides, right? You had the tech side from your academic education, and then that experience of opening the assisted facility, the assisted living facility, exposed you very closely to the insurance piece of it.
Right.
So you're not just a tech hammer looking for an insurance nail to fix. You recognized an actual problem. Those are my favorite in Insurtech. The ones that I think will be successful. How's been the acceptance in the market? So I like I said at the beginning, I don't really know the healthcare carriers, but with the PNC carriers, you show up with a new idea, and they're not exactly hungry for them. At least they were not back in 2015. So how was the experience when you went to some of the health carriers that you were familiar with this cool new idea? Or
It was a hell of a time. I mean, sales was really challenging, and Abel's right. Like you could have the coolest new widget with the best technology. If you don't view it through an insurance lens and really as a vendor understand the procurement life cycle, you're not going to get it. You're not going to win. You're not going to get a contract. You might get a pilot if you're lucky, but even converting that into a full term deal is sort of challenged. So the great story about ours is I was that person who like, we have this cool technology. We have this great personality-based matching of caregivers. We're going to deliver awesome services into your home. We're going to reduce your savings by $8,000 per claimant annually, which is a massive number when you look at the number of members that are out there. Nobody wanted it. Flat out.
That is
like
crazy,
right? Like yes, it was because.
So if I'm the P&L owner in any area of an insurance company, and you come to me and you say, I'm going to save you $8,000 per claimant, I've got data to show you that that's the case, right? And I'm going to charge you significantly less than $8,000 per claimant.
Yeah.
Like it seems like so logical to go ahead and say yes. So what did you find? Why?
Well, just even understanding, like we didn't talk the talk, like we didn't, the insurance part, like what you're talking about with Abel, is understanding that aspect of like, how do you get a referral over? How do I interact with the claims team? Like these really basic things, but are on the other side of the table when you're trying to do a deal. That's what the if you're on the claim side of things at least, or even on the underwriting, you have to understand like how are they going to integrate that into the operational flow, and they're thinking like insurance people are experts at assessing risk. Who are we? A 2-year-old company it represents a massive amount of risk to a Fortune 100 insurance carrier, right? Especially, I'm gonna introduce you to my policyholders. Like, get out of here. So even though we could save a lot of money, that risk is still there. And so it wasn't until we actually started to ask questions. So like, yes, I had a thing I wanted to sell, but what we really wanted to do is really help sort of broadly our mission. And I think this is what's really important as you craft mission and vision, like craft like understanding how to help individuals in their home. That's a big proposition. And so as we started asking questions, instead of just like constantly pitching the same thing, we started realizing that the problems that insurance carriers at the time, back in 2017, I think is when we got our first significant deal, weren't just the home care expense. It was what I was mentioning, the paper. Like, we have all this paper. We got to figure out what to do with it. And it took a really smart SVP at a major carrier who said, I presented this beautiful deck on this matching, all this great information that we can gather. And he was like, no, I want that. I want that mobile app. Can you do that for us? And I go, this thing? And he's like, yep, yes, we can. And so that was like our first product where we pulled out a section out of, like, let's say an eight sort of slide deck, just one little piece, and we built that for them. And then that started generating a really nice relationship with other carriers, and that's when we were able to deploy other solutions. I think you got to listen to what the insurance company needs are, and I think that's what you were sort of mentioning. It's understanding what their unique need is, not necessarily what your solution is, and like have that conform. Like, you kind of have to conform to them.
So I know that there are less health carriers. Like in PNC, I have 2,500 carriers to go after.
Yeah.
Life has like 40, right? And health is somewhere in the middle.
Yeah.
So how many health carriers are you currently working with, if you can share that?
Sure.
And which type of health carriers are kind of your bread and butter? Is it the blues in the different states? Is it the small shops, or is it really big shops? Or
So you're hitting on something that was a big struggle for me during, as you can imagine, so we're venture capital backed. That was a big challenge for us early on with my fundraising, because we didn't even play in the health insurance space. So you mentioned the 40 life carriers. We played in long-term care insurance, which typically were life carriers. So we're talking 40.
I didn't realize that it was
So
it was life carriers that did long-term care. Okay.
Yeah. Those are the ones who wrote a lot of that paper back in the early 2000s.
So yeah, there's very few of them, and they're very large.
Yeah, but they're huge, right? Like,
and if you think PNC is conservative, life is probably the most conservative of all the insurance sectors.
So we don't like to do easy things here at the Helper Bees, if you can sort of tell. Like, we're going to go ahead and target small number of carriers, really difficult market, but like the census data is like this. I mean, the slope is just insane. And so like this is what we want. This is the area we live in. This is the area that we want to impact. So there's not very many life insurance carriers, a lot of consolidation with those blocks. We're on the claims side, so that really helps. We're not on the new sales necessarily yet. So we started, I think, back in 2017, we had our first carrier. Now we work with over a dozen large long-term care insurance companies, and we're about to announce a deal.
Portion of the life industry, like in PNC, you could work with 12 carriers and not
be like nothing.
Right, exactly. Yeah. And really you're touching 3% of the overall market. In life, you're working with 12 carriers, you're probably touching 30% of all life business.
And there's more growth there. The good thing about that is like the new claims volume is exploding, but you mentioned the blues. We're going to announce a deal soon where it takes us into more traditional health insurance, specifically Medicare Advantage, where we'll announce a deal, pretty significant deal, which will touch a lot of lives and immediately put us sort of on the leader of home care. So we're taking what we've learned in long-term care insurance, and now I'm able to target some of the larger health plans out there. So we're growing sort of our addressable market because we've learned quite a bit in long-term care insurance. Very similar. It's a little bit actually smaller market, oddly enough, in Med Advantage, but we'll take it to there and sort of to other plans after that. So the blues certainly are some. Mm-hmm.
So I always tend to ask, who is your client? What I mean by who is your client is who is the person in a life carrier who is likely most interested? Like which of the leaders is it? See, normally I throw out a couple of different people at or a couple of different roles. Right? Is it the CIO or is it the right? In the case of life carriers, I don't even know what the different roles are. Who is generally the client?
VP of claims, SVP of claims, who owns claims operations, are typically who sees the value in what we're doing. They're seeing, in our industry, we call it the claims cost curve. So it's just like, what does that curve look like when our policyholders are approaching claim age? This is what's really interesting about long-term care, though. It's very different from P&C. It's uh, you go on claim, you stop paying a premium for a vast majority of individuals, and you
Okay.
don't, and you also don't tend to bounce in and out of claim, right? Because when you're 85, it's not like suddenly you're going to start looking like a 60-year-old. So average claim age is 83. So if you look at the
Okay.
let's just look at age. As those age
Mhm.
shifts of policyholders start to march towards your average claim age, that means you're going to have a big block of individuals who were paying premiums now becoming people who you're paying claims out to. And so that's where the claims individuals, that's where we sort of come in. We help with scalability because it's no secret to you, uh, it's paper-based processes for a lot of carriers out there, specifically around life and even health plans. So we digitize that information. We help with scale, so you don't have to scale headcount. You use technology for that. So we solve their operational overhead, but we solve the reimbursement issue as well.
Okay. So hey, life carriers in the audience, or life carrier leaders in the audience. You remember all that LTC that you guys sold to the boomers? Uh, and you're still running claims on paper. This is your warning.
We can help.
It's
Yeah, we
time
can.
to, before you get hit by a wave of boomers hitting 83 years old. Uh, digitize your
But that's a
process
good
and
It's a good point because we get inbound interest and we did some work in comp too, workers' comp, because who else as the US and as the world ages, what else is that going to affect from a risk
Mhm.
perspective? And
So
so we did a lot of work with
talk,
comp
yeah,
around
talk to
that.
me about that work with comp, because likely we do have a lot of listeners that are comp leaders. So in
Yeah,
workers
so
comp, what does your product look like?
we've done a number of things. The most sort of easiest to understand based on what I just was talking about with long-term care, it's helping to reduce catastrophic claims. So these are claims where individuals who have severe brain trauma, who will be on claim for decades, amputations, those sorts of issues. We come in and bring our nursing services, our caregiving services, and our social work services that we specialize in virtual as well as on-site to come in and deliver transformative care. That $8,000 per claimant number I mentioned to you for comp, actually that's a lot higher because these individuals receive a tremendous amount of care that comp carriers will pay for. By and large, it represents maybe 1% to 2% of their claims volume, but has an outsized portion of the reserves. So just from pure delivery of better care, we help with expenses. We also help the pretty significant comp carrier with their premium assurance. And so this is like based on sort of your payroll. We built machine learning models as to what premium should be charged. So we use our data modeling team to help transform that process and saved a tremendous amount of money just by using really interesting data, third-party data out there, as well as existing sort of 20 to 30 years of claims data to transform that entire sort of premium process.
Okay, so basically the chief underwriter or the chief actuary,
Yeah, that's right.
if you're listening, this is something interesting that could be helpful to you. How is the service priced? Is it priced like for LTC carriers? Is it priced by life?
Yeah, so it depends on the product. So pricing for that, for instance, we do nursing assessments. So this is on-site in all 50 states, DC and Puerto Rico. Now we're sort of the leaders in virtual nursing, and so that's led to a significant amount of growth for us. That's like per assessment. Like every assessment you go out, you on a nurse, you pay for that. We have our Care Concierge product, which is like this really fascinating product where we manage lives to keep them at home, more of like a care management services. That's going to be more like a per member per month fee. And then some of our software that we license is just a SaaS-based model. So you buy seats or you buy a subscription for a product monthly, and you just pay a per user fee.
Okay, so basically there's a variety of
That's right.
options,
Correct.
and because you have a variety of services.
Mhm.
Okay, fantastic. So that's all I've got when it comes to
Mhm.
questions. Normally, I look a little bit at your career and ask you how it happened. You did kind of give me the story of going from academic to this. I am curious. Uh, the Texas Beer Company and the hops and grains, but it looks like that was just
Yeah.
investment. Uh,
Yeah, I like beer,
okay.
so.
What is Austin Up?
Yeah, so early in my career, so I've been a part of several nonprofits in Austin. So Austin Up is an advocacy group here in Austin that helps to raise awareness around older adults, both employment as well as services. And so there's a number of nonprofits in the area that I've been a volunteer on the board of, where we either focus on people with dementia, those with no access to care. I was on a wonderful nonprofit called Family Elder Care that delivers sliding scale fees for in-home care services for low-income older adults. So it's essentially private enterprises like nonprofits entering the sphere to help deliver services to older adults that can't afford it. That was something I've been passionate about for the last dozen years or so.
I love how like basically almost everything you've been involved in has all been around this uh, mission of elder
Mhm.
care.
Yeah,
Thank you. Deeply needed in the U.S. We're just not good at it. It's so expensive, and we have a time bomb heading our
that's right.
way as the very large boomer generation. I didn't tell you this before we started recording, but a lot of the audience knows this. So I'm not a demographer, but I play one on
Hmm.
TV. I'm not a demographer, but generations is kind of how insurance got started, especially this transition from the very large baby boomer generation to the Gen Xers being much smaller, and then to the very large millennial generation. So yeah, as the boomers age, and there's this giant generation that is living longer than ever before. We have
Yeah,
Japan problem, right? With a
yeah.
very
But
old
it's
society
by and
on
large,
average.
every industrialized nation has this problem right now, and I think for our generation, it'll be the biggest societal issue that we'll be faced with. So not only dementia, which is just a uniquely terrible disease out there, but just dealing with chronic aging issues. And what you're starting to see is a collision between lack of services that haven't innovated with our weird demands as consumers. And so this collision is like, I want the best thing. Like I want on-demand everything. I want everything to be connected. I want insight into my pets through a camera. I want to be able to talk to my delivery driver from my Ring doorbell to, oh my goodness, this is what long-term care is right now. And so that collision course is happening. And I think although the demographics are absolutely frightening, there's a lot of really interesting innovation happening out there. And so we sort of knock insurance in general when it comes to like slowness to adopt, but when they do, it will change people's lives. And I think that's what's fascinating about long-term care insurance and Medicare Advantage as it starts moving into this arena. You've got this really great sandbox of these insurance carriers actually doing a societal benefit of trying to figure out, sure, they want to reduce their own costs, but they're trying to figure out aging in America. That's what they're trying to do. And so everybody benefits if they do it really well. The problem is just that that rate of innovation needs to happen very rapidly, just because of what you said from the demographics perspective. It's happening now, and it's about to get accelerated.
That's fantastic. The quite a mic drop there. Um, can't close better than that. Thank you for joining me today. Very interesting stuff. I will tag you on
Sure.
LinkedIn when this goes live. It'll be a few weeks. Uh, so for anybody who's interested, Char is tagged on the show notes, and I will also include the link to the Helper Bees, which is super easy, thehelperbees.com. Uh, yeah, if you run a life or the work comp area of a PNC carrier, this sounds like just the kind of thing that can be really helpful. Give them a
Yeah.
call. Thank you for joining me
Yeah.
today. It's been fantastic, and thank you for the work in this very important area that is not only an economic problem, not only a social problem, but it's personal to pretty much all of us because it's going to be our parents,
That's right.
right?
That's right.
Thank
Yeah.
you.
Thank you.